So in today's video, I just wanted to give you guys an update on what's happening with BMNR, check out some of the pricing action that's been happening with the stocks, taking a look at alternative funding models, and then finally finish it off by looking at how the banks and TradeFi is getting into Bitcoin, Ethereum, and crypto. So my name is Colin. For those of you who are new, what I do is fundamental analysis on crypto and stock projects that I believe have long-term value. Now, before I get started, remember that none of this is financial or investment advice. The crypto market and stock market is extremely volatile. You could lose your money, so make sure you do your own due diligence and research before you get started. Furthermore, this is not a sponsored video. I got nothing to sell you. And finally, I hold on to BMNR. It's a big position of mine, and I also hold on to ETH as well. For those of you who are on Twitter or X, please give me a follow where I can tweet out information a lot faster than I can make these videos. So with that out of the way, let's get started. So first off, let's talk about their recent update. So on October 6th, they gave us this update right over here. If you go down to the details, they talk about how they have 2.83 million ETH tokens, 192 BTC, roughly $23 million. And then their orbs holding, that's 113 million. Their cash, 456, giving them a $13.4 billion valuation. And we also know they also purchased 179,000 ETH. Now, they also gave us some other important details. Right now, BMNR is 13 billion, only behind Strategy as the second largest digital asset treasury company. If you look at its stock volume, it's now ranked the 28th most liquid stock with about $2.5 billion being traded every day compared to all the other stocks that are listed in the US. Now, if we take a look at the volume between all of the DATs, basically Bitmine and MicroStrategy makes up almost 80-90% of all the volume that's being traded out there. So they're clearly number one by a far margin in the ETH DAT race. Also, if you take a look right over here on October the 6th, BMNR's volume is actually higher than MicroStrategy, even though they are magnitude smaller than Strategy right now. Now, before we get into our pricing model, this is Tom's prediction. He still talks about BTC getting to 250 grand by year end, ETH 10 to 12,000, and then ETH at 60,000 in the long term. Does ETH have the chance to get to 60,000 today? Absolutely not. But once the payment rails gets adopted, you know, the financial system, the banking system, lots of retail onto ETH using its stablecoin in the long term, we're talking like 3-5 years down the road, maybe, but in this cycle, definitely not. So jumping right over here onto my Excel, as you guys know, I love these spreadsheets because it helps me think about things clearly. You can see how many ETH tokens they have at a price of 4,500. ETH's been trading between 4,600. The ETH holding is 12.7 billion. This is their cash. This is their BTC holding. This is their orbs being traded at $10.20. You can see the NAV is 13.3 billion. Shares outstanding. The last shares that they updated was 284 million, but as you know, they purchased more ETH. So we can only estimate this number as Tom does not release it. So if you look at the number of ETH they purchased with the volume that's being traded, I came out to be roughly between 310, 320 million. I took 315. So this is an estimated number. We'll get the accurate one from Tom once he updates it. So you can see right over here, the NAV per share is roughly 42.40. And then the market price as of today's close is $60 per share, giving you an MNAV of 1.4. And then finally, most people forget that you could stake these Ethereum right over here at 4%. They would literally pay you $500 million on the staking alone. So right now in October, ETH is trading at 4,500 with a NAV of $42, MNAV of 1.4, and a share price of $60. Now in November, I do think ETH will touch 6,000. It will reclaim that 5,000, getting to 6,000. At that price, you can see the NAV has grown. And if you take the MNAV 1.5, and please don't say that we can't get there, we were there just 2 weeks ago, you can see a share price of $83. And then in December, if ETH goes up to 8,000, you can see if you keep everything the same, expand the MNAV because people will be buying like crazy, you can see it gets to $120. So you can see the rapid extension of ETH just as we continue to thunder up in price and expanding that MNAV. And in my own personal opinion, I think they're going to trade a lot higher than 1.6. It'll be 1.75 or 2 when everything is thundering up as we head towards the end, the third part of this cycle. So let's go over to the chart and take a look at what's happening with BMNR. So if you look at its price action all the way back in early August, okay? August the 1st, it started entering this ascending triangle right over here. So notice it's a triangle and it is ascending, right? That's why we call it an ascending triangle. So if you take a look at the price, every time it hit this resistance, this line right over here, this is where the sellers step in. Every time it hits $64, $50, $65, the sellers have sold it off. Every time they sold it off, buyers have came in with strength and bought up that dip, okay? So this first initial dip right over here, gets bought up. Again, it hits this $64, $65 line. Sellers come in and resist you, so they sell it off. Again, this dip gets bought up. So each time we have a higher low right over here, all the way into this apex of this triangle. So I expect price action as we come into here. You could see price action is going to be like this. It's going to be bought up again. It's going to hit resistance, being bought up again. And eventually I do think we pierce and we go up from there. So once we get out of this ascending triangle pattern, if we can have confirmation on high volume, getting out of here, I believe my target will be between $80 and $90 as we start to go into price discovery. But this is a very good pattern. I don't use technical analysis all the time, but I do use it for entry and exits and when I see a good solid pattern. So the other way to look at price was what Tom was talking about, and I use this all the time, and other people have talked about this. The ratio of the price of ETH to BTC, you remember how he talked about if it was the 8-year average, it's 0.04, the 2021 high is 0.08, and then he says this cycle, remember he predicts that it's going to go to 250K. So if it's just a ratio recovery of the 8-year average, he's saying that ETH is going to be priced at almost 12,000. And then at the 2021 high, when the ratio is 0.08, he's saying that ETH is almost 22,000. And then of course, during his past presentation, he talked about the payment rails and the entire payment system of ETH getting to 62,000. Now, I do not think that this will happen at all during this cycle. There's zero chance of that. I've been in crypto for 10 years. What I do think is that this is very possible towards the end of the cycle. Well, my prediction is 8 to 10,000 by Christmas, early New Year, but I don't think that we'll get here. So the other way of looking at price is simply as a recovery of the ETH to BTC ratio. So if we come right over here and we assume that Tom is correct with an assumption of 250K Bitcoin, here's the average ratio, the 8-year average. Here's the 2021 high, and here's the payment rails. Here's all the pricing. Again, I do not think this will happen, but if it does, and we keep everything else the same right now, we can see the NAV right over here being 109, 197, and then $500. If we just do an MNAV of 1.42 without changing today's ratio, you actually get a price of $155, $281, and then of course 800, which I do not think will happen. But this right over here, just as a ratio recovery, you could see on a very low MNAV of 1.4, you could easily go over $100. So if we go up to, let's say like 1.6, that's $175. This at 1.7, if we go up, you could see it's well over $300. Now, someday it will get there, but not in the time that you may think that it does, okay? So keep this in mind. This is what Tom's talking about. So coming back to this idea of perpetual preferred stock. Now, I want to come back to this. Why do I want to come back to this? Because this has already been ran by MSTR and they ran it with exceptional success. So if you remember, we can use this to acquire ETH without immediate dilution, okay? If we just copy MSTR's playbook, and Tom has already said he will copy it. I know on certain interviews, he said he wants to keep it clean, so you might want to stay away from the convertible bonds and debt, but the preferred stock, the preferred shares are a whole different category. And let's take a look at it again. So if you've been following me, you know that I'm a big fan of this. They're hybrid between stocks and between debt. Why? Because they pay a fixed dividend. Now, MSTR is paying between 8 and 10%. We talked about this in many videos already. And then they're senior in liquidation, meaning that should the company go bankrupt, these guys will have claims to the assets before the common stockholders does. And then there's also a conversion feature that we can build in, turning those preferred shares into common shares, but in an accretive manner. So the positives is there's no dilution up front. And this is a perpetual loan because you loan out $1 billion forever. The payments are also dividends. I keep on coming back to this because they're not coupons like bonds. During crypto winter, during a market meltdown, you could suspend those dividends and you don't have to pay them out at that time, therefore defending the company's treasury asset. And then Saylor keeps on talking about this as being intelligent leverage because it allows you to use a higher leverage ratio without that credit risk of maturities from your convertible bonds, from your debt. So in the past, we talked about this as MicroStrategy employing their 4 preferreds. It makes up their capital structure of $6.3 billion. These are the 4 preferreds. They all have their own unique things about them that makes them stand out in terms of volatility and then in terms of shares appreciation, but they all pay out between 8 and 10% with some upside to them and protection to the shareholders. So I do believe strongly that BMNR should really consider this. And at some point, I think Tom is a very, very smart manager. He's definitely considering this in the long term, maybe not right now, but it will keep the balance sheet much more clean than adding significant debt onto there. So no immediate dilution. Yes, people like them because they get a dividend, and at some point we're going to grow big enough. And we said this is a forever loan, right? You loan this out forever, and therefore increasing that leverage ratio. Okay, so what it allows you to do is it allows you to grow NAV, right? It keeps the shares in check. It keeps the shares the same because you're not increasing common shares and diluting your common shareholders. And then you can grow your ETH treasury. This way you have collateral to pay off those dividends, to pay off those loans that you have from the company. And remember, the company is already staking. So once they start to stake, they haven't done it yet, but that's paying them 3 to 4% right off the back by them staking their ETH already. So by limiting the amount of perpetual preferreds, let's say in the case of MicroStrategy or in the case of MetaPlanet, they're limiting it to 20-25% of it. It will help the shares grow tremendously without this pressure on dilution. So if you've seen my last video, I talked about this in MetaPlanet. I thought that they had a genius way of approaching it. They actually ran a simulation, which I thought was very cool. For those of you who missed it, go back and watch it if you're interested in it. But I'm just going to bring it up here. So here's BTC. It's been growing at 30% ARR every single year for the past several years, okay? Even if we exclude the first few years, it's still growing at 30%. If we look at ETH, if you look at the last few years, let's forget about the first early years, but if you look at last 4 or 5 years, really ETH is still growing at 45% a year. In some years, it has a significant growth. So here's that really cool model that MetaPlanet put out. So this is their work in terms of why they're using the preferreds, because they're accretive to the shares irrespective of MNAB. So as long as your BTC is growing, and it is growing by 30%, notice right here, compared to the preferred dividends that are being paid out. So in MicroStrategy's case, they're paying out 8 to 10%. If Tom Lee were to employ this, he would also be paying out 8 to 10% because that's the yield, the competitive yield that we're competing with. So if you look right over here, you don't have to grow MNAB, but if your BTC is still growing, in our case, it would be ETH. Notice at 30%, and if you're paying out a yield of 8%, that means that is equivalent to an MNAV of 7.66, almost an MNAV of 8 without having to increase your MNAV. So if you look at their model right over here, you could go through their theoretical calculation. You can see that it depends on the growth of BTC. It depends on your dividend rate. And if you look at it together right over here, it really is that range between the growth of your asset, so in terms of BTC or ETH, minus the dividend rate over time and compounding that. So really, I summarized this during my last presentation. I said, if the asset is growing, the ARR is growing greater than dividend, you get an accretive growth, right? And this gap, it widens a lot more, right? It grows a lot more rapidly as the gap widens. If your ARR is the same as your dividend, right? If you're paying out the same as you're growing, that's pretty neutral to mildly accretive. And then if your ARR is smaller than your dividend, that's when you dilute the shares. But I can't imagine BTC or ETH growing at a rate less than 8% in the next 10 years, okay? So you would only apply this model if you believe that your asset is continuing to grow, and it is. BTC is still compounding over 30% and then ETH over 40%. So if you look at the translation, it says the stock doesn't need a high MNAV to create accretion because that positive spread between the growth, the ARR, minus the dividend rate would do all the work for you. So here's just a wild calculation. I know the models are different, but if we were in an ideal world, apply this perpetual preferreds to our stock, okay? And if we take the price right now, if ETH grew at 20% and we did a dividend yield of 8%, you can see right over here, the equivalent MNAV, according to their model, would be 3.44. Even at this share price, if we don't dilute our shareholders, you could see the model you appreciate significantly in terms of the share. If you look at ETH at 30%, if you pretend this is 30%, you go over and you look at an 8%, that's 7.66. This is where we're getting this value. That would give you a huge value as you start using the preferreds. And then finally, if you're growing at 40%, which at today, ETH is still growing at 40%, at an 8% dividend, notice your coming at an MNAV. That's the equivalent to increasing your MNAV. So notice I said equivalent to MNAV, not the MNAV itself. It's not putting pressure on you increasing your MNAV. It would actually give you over $1,000. Now, of course, I know this is just a theoretical model that was applied to BTC, but I'm saying if we applied that same logic to ETH, and of course, using a different preferred ratio. Let's say BMNR doesn't go out full on, but it gives a 15% in terms of their capital structure of allocating it to the preferreds, we would actually increase the value of the shares significantly from here. So guys, as of today, I'm very bullish on BMNR and I'm very bullish on ETH and where we're going. Why? Because the macro backdrop, along with all of the adoption that's going on. So let's talk about some of the adoption that's going on that I feel is very important. Number one, this was by rip.eth right over here. He summarizes it very well, putting it out there. You can see the amount of different financial institution, payment vendors, and the amount of businesses that are building or experimenting on ETH. Now, why are they all rushing in? Why is TradeFi and the banks are all rushing in? If you haven't seen this data and you invest in the market, notice the S&P 500. If you look at the S&P 500 in this blue line against the US dollar right over here, you could see that during the past 5 years since 2020, it's appreciated 106%. Now, if you look at it, you'll be like, wow, for the TradeFi people and the people who've never invested in crypto, this is a great return regardless of what asset class you're invested into. Now, if you look at the S&P 500 priced in BTC, it's actually lost 88% in terms of BTC value, in terms of BTC terms right here since 2020. So when the TradeFi people look at this is mind-blowing, and that's why they're all rushing in terms of digital asset. I know this is BTC, but it starts with BTC, it converts into ETH, and then it goes into other assets like Solana, like Sui, like Aptos and other blockchains, okay? So it starts with BTC, but you could clearly see there's a clear advantage for them in terms of investing in digital asset versus just going all in on the S&P 500. And we could see this being reflected at all of the major asset firms, all of the investment banks, the two Morgans. So first off, Morgan Stanley right over here just recently put this out to their 16,000 advisors, their financial advisors, over $2 trillion, saying that you can allocate between 2 to 4% into basically Bitcoin, into digital assets. But notice now the banks have started moving their way there, whereas 5 years ago, I'll be honest, transferring your money from your bank into whatever online CHX, centralized exchange that you're using, that was a big issue. You had to go through questionnaires. So this is a big shift now. All the way from then in 2020 to now, they're actually advising, their advisors to advise clients to take on some exposure to BTC. Now, if you look at JP Morgan, the other Morgan right over here, JP Morgan says that they feel that Bitcoin is undervalued relative to gold. They see a path to 165Ks. Now, I'll tell you why this is such a big deal. It's such a big deal if you've been following the financial markets. You remember that the CEO, Jamie Dimon, was out there calling BTC basically a fraud. He talked about it being used for drug dealers, murders, and people living in North Korea. These are his words, not mine. So you could see the shift, the mentality from the top down to now they're actually calling it an asset. And then moving along to their friends at Citigroup, you can see Citi right over here. Their base case for BTC this round is 181,000, whereas ETH, it's a lot lower, 5,400. So I think this guy's got it totally wrong and upside down. But notice their bull case right over here. It's 230,000 in the next 12 months. Okay, that's their price target. This is from Citigroup, and with ETH being at 7.3. So you could see all the financial institutions converging on this. And then finally, I talked about this before, but Joel Lubin confirms that, SWIFT, basically the messaging system of all of the banks around the world, the 11,000 banks moving trillions of dollars around, that they're actually piloting it out. They're starting to use Linea, which is a layer 2 on Ethereum, to really build out its crypto payment ledger. So he confirmed this. He talked about being 30 TradeFi institutions doing this. And then if you look at some of the big banks, right? Bank of America, Citi, JP Morgan, these guys are all over it. And some of you will recognize TD Bank from Canada or TD Ameritrade. All of the major banks are participating in this pilot study, in this pilot trial program that SWIFT is doing on Linea. So there's a lot of things happening on Ethereum right now. So guys, your job right now is to stay patient if you're already in on BMNR. You have to wait until ETH rips up, and because this is crypto, it's extremely volatile. There's still a lot of manipulation that's going on in the market, even with BTC, but it's a lot better than, let's say, 4 years ago when BTC was taking a 35-40% hit every time we have these drawdowns. You notice that the drawdowns are a lot less. So right now, I'm extremely bullish on BMNR. It's already touched $60, $70, and it's on its way up. We're heading into the best part of the cycle right now, because if we look at Q4 right over here for Bitcoin, and if you just look at 2020, you don't even have to go back to the old data to now. Notice that Q4 is the strongest quarter. You know, Bitcoin having over 50% in 2023, 47%. If you had to summarize this in the last 5 years from 2020, Q4 is a 50% pump for Bitcoin. And the same thing with ETH right over here. If you look just from 2020, we could ignore the other years, but if you look at ETH from 2020, the same period, it's pumping at 37, almost 40%. So we're entering the best quarter and the last part of the cycle, where if you haven't been in crypto, you'll notice that most of the crypto gains are made in this last part of the cycle. So right now, in terms of the macro factor, things look positive as we head into Q4. So my target right now for BMNR remains over $100 by the end of Christmas, and then also ETH between 8 and 10Ks by Christmas time as well. So I hope that you guys enjoyed this video, you found it helpful, and if you did, please consider subscribing, and I will see you next time.